and we're going to go ahead and get started. And again, really quickly for people who just joined us, two ways that you can contact us. One is by typing in your question at the bottom of your control panel, or on the left-hand side, you can put up your hand and we will unmute you during the Q&A time and you will have the floor. So welcome everybody to the National FairTax webinar. It's February 2014. Larry and I are in our 5th year doing webinars. So such a great forum, and it's so great that you can all get educated and ask questions and stimulate some healthy debate, if that is what we're supposed to do tonight. Excuse me. And we're going to rock and roll here. We're going to rock and roll as soon as I can find how to advance my screen, because sometimes technology does that to you. Here we go. All right. So one of the things we like to say about the fair tax is that it is simple, fair, and transparent. And here we go. So our current federal tax code is approaching, if not over, 75,000 pages.
Muted.
And it's just convoluted. There was a very interesting tax study done where an individual's tax return was given to a number of different tax preparers, and I forget the number of how many it went to. I want to say the number was 30. I could be wrong, but it went to many, many people, and it came back different every time. So the point is, I don't think the debate is whether or not our current tax system is or isn't broken. We know it is. It is convoluted. It is tricky, and quite frankly, it is stifling to economic growth. So, you know, this country has been great for so many reasons because we evolve and we're global leaders in the evolution of democracy, of equality, and so many other ways. And here is one way that we can evolve and be leaders in the global financial and economic marketplace again, if we were to implement the fair tax. And so all the things that our current tax system does to stifle economic growth, the fair tax would remove those burdens and allow the market to perform in a very healthy way, offering many more economic advantages, and we'll illustrate that throughout the night. Okay, so we talked about this. So current tax code is convoluted. It punishes growth and expansion. It inspires the wrong behavior. Lack of transparency. There's a lot of loopholes in it. So those who know how to get around and game the system, they can do it, and those that can't, can. And so there's winners and losers. It's incredibly inefficient. We'll show that. Impedes privacy. And it's time-intensive and laborious, and we'll talk about that as well, especially in the special topic. So the solution is the fair tax, as we believe. It's legislation that currently exists. That's the bills, H.R. 25 and S. 122 in the House and the Senate, respectively. And so, again, here we go. Not convoluted, simple. So the fair tax is 131 pages double-spaced, compared to the 75,000 pages that you saw on an earlier slide. And so wouldn't you agree that's refreshing? You know, when you think about our, you know, obviously 75,000 pages, when you think about the Obama healthcare bill, which was well over 1,000 pages, and it's like, boy, how refreshing is it that one of the most important pieces of legislation can be written in a comprehensive way, and it's literally a fraction of the voluminous legislation that normally gets put forth in Congress. So it's a leader that way. So let's look at, we're going to eliminate all of the ways that the current tax code stifles our economy one by one. So instead of punishing growth, the fair tax supports growth. It is a consumption tax, not an income tax. And so what that means is we only pay taxes on what we spend as opposed to what we earn. And that's really interesting. So very specifically, the fair tax eliminates all federal income taxes and repeals the 16th Amendment. And it replaces that with a national retail sales tax. So we'll get to what that looks like very specifically in just a second here. So if we think about this, if we think about the benefits of moving to a national retail sales tax and removing income taxes, both personal income taxes and corporate income taxes, removing payroll taxes, removing capital gains taxes, the alternative minimum tax, gift tax, estate tax, all of those taxes go away, right? And so, well, what does that do? Well, think about this. There's $13 trillion in global personal and corporate wealth, money, parked in offshore banking centers, and that gets attracted back to the United States. Now, let's just break it down. Why is that? Why are wealthy individuals and businesses keeping all this money outside the U.S. borders? Simple. The moment they bring it in, it gets taxed through capital gains, corporate income, or personal income. And so the moment those taxes get removed, that money gets attracted back into the economy. It's estimated that $1 trillion of it will come back in within the first year, organically. We don't have to print that money. It'll come back in organically. And what that will do for our economy is extraordinary. Businesses will grow. They will expand. There will be infrastructure built. There will be new jobs. And with new jobs, unemployment goes down, disposable income goes up, and people will begin spending a lot more money, and that cycle will continue, and the domino effect of a massive economic boom will continue. So the U.S. will also become a corporate headquarter haven. We'll have the lowest corporate income tax structure in the world. And what does that mean? Lots of jobs, right? So a lot of new buildings built, a lot of staff going to need to be hired, and so jobs, 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 as we just explained. And then, of course, the federal government recognizes a new way to fill its coffers, because the underground economy, which is estimated at $2 trillion right now, pays their fair share. So anyone avoiding the tax system right now, a lot of illegal aliens, anytime they go to the store and purchase something, very simply, they're going to be paying their fair share, right? So we've broadened the base. I think most of the people on this call would know that literally only 50% of households in this country actually pay any tax. And so the fair tax broadens the base. Everybody pays taxes, and it's based on how much they spend rather than how much they earn, right? So very progressive that way, because obviously the wealthy are going to spend a lot more versus those lower income class individuals are going to spend less. Okay, so the next item, we remove lack of transparency and loopholes, and we become fully transparent. And so there's only one tax. It's a consumption tax on new retail goods and services. That number is 23% on all new goods and services, not used goods and not business-to-business transactions. Let me go back a slide to make sure we've got that. This is really, really important. So a great illustration of this is a home builder. So a home builder is a business, and when they purchase all the raw materials that go into building a home, they don't pay the fair tax on that because that's considered a business-to-business transaction. And then they build this home, and then they sell it to the consumer. So the very first time it's sold to the consumer, it's considered a new good. And so what happens is when the consumer purchases that home, the business, the home builder, will set aside 23% of the price of that home into a separate account, and they'll be responsible for remitting that into the government. Now, once the consumer who lives in that home, for however long they live in it, they sell it to somebody else, it becomes a used good, and no longer is the fair tax levied on that transaction for as long as that home is resold forever into perpetuity. Right? So that's just a very simple way to understand how the fair tax will work for goods and services. All right, so actually let me go back once more here and just iterate. So this transparency issue. So right now, think about this. The federal tax code gets changed all the time, and we as citizens, we never know about it. And it's a very convenient way for Congress to hide what it is they're doing with our money, right? So if they have a project they want to get approved and they need funding for it, oftentimes what they can do is shift some of the language inside the federal tax code, move some money around that we don't know about. It's our money, and they get this project funded and paid for. Well, that goes on all the time, and we never know about it. With the fair tax, literally, the 23% is printed on receipts. So imagine you go to the mall, and I've shared this example before, and you buy a $100 pair of jeans. Now, by the way, the fair tax is inclusive. And so whatever price is on a good, when you go to purchase it, that's how much you pay. You don't pay 23% on top of that. So if you buy a $100 pair of jeans, then inside of that $100, you've got $77 of actual cost for the jeans, and then another $23 in federal tax, right? But that 23% is printed right on the receipt. So if you go to the mall the next month and you see on that receipt 24%, guess what? You're going to know that Congress changed our tax rate. We're all going to know. And we're going to, every household in this country, if we want, can get on the phone, call a representative and say, roll it back. We're not dealing with that, right? But now when they change it, we don't know about it. And so the transparency is really, really powerful. And quite frankly, it's one of the reasons why a lot in Congress are opposed to the fair tax out of self-interest, because right now they can move money around without anybody knowing about it. Well, that's really not why. That's really not. It's not an effective checks and balances system. It's very ineffective, and there's no accountability with it, and we got to change it. So horribly inefficient. Right now it costs the IRS 25 cents to collect $1. That's not good. That's poor. That's inefficient. And the IRS costs us $10 billion to run. So what's going to happen is over a 3-year period, the IRS will get defunded. And here's how we're going to collect this. So the states will collect from the businesses, and 45 states currently collect a sales tax, so the infrastructure to do this already exists. We get 80% more efficient because we go to collect from 18 to 20 million businesses instead of 120 million households. That's brilliant. So the opportunity to collect money is going to be much greater because the sheer number of people we have to collect from is dramatically decreased. And then it's a very simple form. We're only asking one question of businesses. What were your gross receipts? How much did you sell? Period. You take your gross receipts, multiply times 23%. That number gets remitted to the State Sales Tax Bureau, which then sends it into the Department of the Treasury every month or every quarter. Okay, so it's much more efficient and very simple to collect compared to what the IRS must do today. All right, so we've talked about this. The IRS costs $13 billion. It costs them $0.25 to collect every dollar. We're going to eliminate the IRS after 3 years. It's a beautiful thing. And then, of course, we remove this view into our personal finances, and our privacy gets protected again, because no longer are we sharing all the intimacies of what it is that we earn. Our income is our business. And it really should be that way, right? So you pay your taxes when you make purchases, and there's no filling out detailed income forms. And you know, this thing about efficiency is really important, everyone. And the number is detailed inside the FairTax book when there's a study done. But ultimately, somewhere around $250 million a year is in the amount of time individuals spend inside their businesses to think about tax implications of business decisions, equates to $250 million a year. Maybe it's more than that. Maybe it's $250 billion a year. I can't remember if it's a billion or a million. But at either rate, it's a tremendous amount of money. And this efficiency is gigantic, because imagine all of that time gets reinvested back into making our products better, becoming more competitive, increasing our efficiencies in the workplace. So all of the time that we spend making these tax-related decisions, we can reinvest back into making our businesses better. It's a brilliant thing. So we become much, much more efficient. And then instead of having winners and losers, it becomes fair. And one of the ways that we create fairness with the fair tax is through what we call the prebate. The prebate assures no one pays federal taxes up to the poverty level. What do we mean by that? So what's going to happen is the Department of Health and Human Services already creates consumption thresholds based on the size of your household. And this is considered poverty level spending. So let's say that you're a 2-adult household on the right-hand side, and you've got a couple kids, there's 4 people. The Department of Health and Human Services suggests that as a household, if you're spending $31,000 a year, you're spending at the poverty level limit. In other words, you're spending just enough to get by to survive, right? So if you take that $31,000 on what you spend and you multiply it times 23%, the fair tax you would pay on that, your payment, you would pay $7,135 in fair tax over a year. If you divide that by 12, you'd be paying roughly $595. So what the prebate does is reimburse the fair tax you would spend in a month in the beginning of the month in advance. So $595 a month will come in direct deposit automatically into your household. And that is reimbursing you for the fair tax that would get levied that you would end up paying on all of the spending that you did that month. Right? So it's a brilliant thing, because what it does is it unburdens all poverty level limit spending for all qualifying households. For everybody, regardless of income. It doesn't matter how much you make, you get this money to come back into your household, which is a brand new revenue stream for every household. And by the way, this is it's really important to understand this, because a lot of people out there who demagogue the fair tax will say the fair tax hurts lower income class Americans. It doesn't. So think about this. For everybody, you've got the prebate, which is reimbursing you for the poverty level limit taxes on the poverty level limit spending that you'd make. You've got that coming in. That's a brand new revenue stream. Plus, remember, there's no more payroll taxes withheld. So let's say you make gross income is $3,000 a month, but you only take home I don't know, let's say $2,400, well, guess what? Your income goes back to $3,000. You literally take home $3,000 post-fair tax because there's no more payroll tax. There's no more Social Security and Medicare taxes that are withheld. You keep 100% of that. And the fair tax collects enough money to fund Social Security and Medicare. All right, so for lower income class Americans, the average American's income is going to go up by 29%, which means their disposable income is going to go way up. They can choose to purchase used goods and save fair tax, and they get the prebate every month. So all those things create an incredible economic position for all Americans, especially lower income class Americans. All right. Let's talk about our pricing. So right now, our business income taxes and the compliance costs are passed off to the consumer. So ultimately, a business looks at its profit and loss statement, and it creates a profit margin for each unit of whatever it sells to the consumer. So built into that are all of its costs. So one of the line items or one of the costs are compliance costs, so time to think about tax implications, as well as paying accountants and keeping people for larger businesses on staff to figure out tax implications, right? So these are compliance costs. So that plus their actual business income taxes, those are factored in as costs to the business. And when the business goes to put a price tag on whatever good it sells, it figures those things in. So ultimately, the consumer is paying the taxes of the business. So not only are we paying an income tax, we're actually paying, in effect, a sales tax every time we purchase something because the businesses pass off that cost to us. We call that the embedded tax, and that's approximately 22% of all cost inside of a retail good. When the fair tax gets passed, the embedded tax of 22% goes away. Why? Because business and personal income taxes and payroll taxes go away, which means all the people on staff and the cost to comply to the tax code go away. So that cost, which is again 22% goes out, the fair tax of 23% goes in. And so it's really important to understand that when the fair tax gets passed, prices aren't going to shoot up by 23% to cover this new tax that businesses are going to levy on new goods and services. No, they're going to go up approximately 5 to 10% in the first year during the transition, but then competition will bring those prices back down to pre-fair tax levels. In an effort to gain a customer base, competitors will lower prices. So really, really important to understand this. So if we think about it, we've got a simple system. It's fair. We've got tremendous economic advantages, and everybody's a winner. The business owners win. The consumer wins. The individual Americans win. The only people who feel threatened by this are the people whose income and job is derived from our current tax code. And you got lobbyists, politicians, and IRS workers, and some accountants. And so 50% of lobbyists are tax lobbyists, corporate tax lobbyists. And they get paid 6 or 7 figures a year to lobby the federal government to change the corporate income tax structure in the favor of the wealthy corporations they represent. Well, when corporate income taxes go away, 50% of lobbyists are going to be out of a job. They're not going to be needed. So they feel threatened. And again, we've talked about politicians, right? They like having this shroud that they can hide behind and move money around without us knowing about it. If they want to change and try to generate more revenue by raising taxes, well, we're all going to know every time we go to the store and we buy something. We're going to see it right on our receipt. So they feel threatened. That power of doing stuff with our money, our tax money, without us knowing about it, is going to be gone. And of course, IRS workers, because they're going to be out of a job within 3 years as well. So these are the people who aren't happy about the fair tax, but let's face it, they're only not happy because they're acting out of self-interest. But as individuals, as individual consumers, they're in a much better place. So really important to think about when it comes election time and there's somebody running on the fair tax ticket, somebody opposing the fair tax, you got to think really long and hard about why would they be doing that? Because as you see this presentation, the fair tax has incredible merit and everybody wins with it, which must mean that somebody who opposes it must be acting out of self-interest. And if that's what they're doing, then clearly they're not a good choice to be a representative for us. So, with that general overview of the fair tax, what we want to do now is we're going to go ahead and field your questions. I'm going to unmute my colleague, Larry.
Unmuted.
Okay.
And we're going to go to these questions. Welcome, Larry. How are you?
I'm doing great, thank you.
All right. All right, here we go. You ready?
Yes, sir.
Okay, this question comes from Wayne. And Wayne's question is, what is the main objection that Congress has against the fair tax, considering the IRS, the existing IRS mess? Well, Wayne, I think I covered part of that in that they do feel threatened in some of their losing some of their power to move money around and acting out of self-interest that way. And then, of course, you know, we're making a major financial shift in the way the federal government generates its income. So that can be scary, understandably, but it's going to be a lot better than what it is that we have now. And there's $22 million of independent third-party PhD research went into the fair tax. It's the most amount of money ever spent on tax reform. And so when these brilliant people came up with 23%, that was the number that would fund our federal government in a revenue-neutral way. So that's my best answer. Larry, do you have anything else you'd like to add?
No, sir, you hit that nail on the head, Mark. Thanks.
Yep. Okay, good. So Charles asks, what method would be used to verify citizenship to qualify for the prebate? Larry, you want to tackle that?
Sure enough. Well, we do not have the specifics of that, Charles. That will be done by the regulations that are written once the legislation is passed. But it's not, also I have to say that it is not citizenship that is required. The only requirements for the prebate are that there be a legal residence in the United States and that each person has a validated Social Security account, which we know is a lot easier possibly to validate than citizenship at this time. So what it says is that you don't have to be a citizen. If you're here legally, you have a green card, you're working, you could qualify for the prebate as you are a productive part of our society. Mark?
Yeah, thank you, Larry. Here's a good one for you, Larry. Chris asks, what is it going to take, or do we think there's a chance the fair tax could get passed under our current federal government and the people who are running it?
We don't really believe there is a chance, because even if Congress were to pass it, President Obama would not sign it, and he would have to put a veto on it, which he would do because he's got his reasons for that. However, once the fair tax is passed by Congress, once we get to that point, then the knowledge base that we will create as a result of that will be much, much larger than what we have today. And with the presidential elections coming up in 2016, we're pretty confident that a 2016 presidential candidate who makes it into the office will sign the legislation when passed. So it's still a mystery to us, and at this point we would really be happy just to have the legislation get onto the floor of Congress for open debate so that America will become informed on what's really going on. Even if the fair tax were not passed within that debate and something else was selected, the knowledge that has been created throughout America will give us even more strength to move it forward in future congressional sessions. Mark?
Thank you, Larry. Okay, this is from Randy. He says, I got an email from the House Ways and Means today saying that CAMP is reforming the tax code, which means that the IRS will stay, and we know that that won't work. So we need to contact CAMP and the Ways and Means Committee and sell the fair tax now. I agree, Randy. We're doing our part. We're doing the best we can. We're playing one small role in it, but we need a lot more people to inform their elected officials to put some pressure on. How does the Health and Human Services know what a family income is annually? They don't know what. That's a question from David. They do not. The poverty level limit thresholds that the Department of Health and Human Services set is not based on income at all. So they don't know that number, but they don't need to know that number. There's a number of factors that go into it, but income is not one of them. Larry, anything else you would add to that?
I always just say that income is not a part of the issue whatsoever, other than, based on history, the Department of Health and Human Services poverty levels were based on income, and the fact that people who are spending all of it are considered at the poverty level. So they're taking those, what they are spending numbers, and translating that into what it would take to qualify for the prebate. Not to qualify for the prebate, but what you would be spending based on those levels, and the fact that if you are living at poverty, your fair tax liability is zero. And if you're living at under the poverty level, then you've got a little bit of plus income. The first dollar you spend over the poverty level, you actually pay the 23% tax on like everybody else. Even at that, the average effective tax rate under the fair tax, even though the sales tax rate is 23%, the effective rate for the average American will be approximately 11.5%, considerably less than today. Mark?
Yep. Now this is a good question. I don't know if we've ever had this, Larry, from Randy asks, how many employees will be needed to run the fair tax?
Well, not being in human services for the Department of Health and Human Services, I can't answer that. But we know it would be considerably less than what the IRS is today. One reason is that the federal government is not processing the tax returns from the individual businesses. The states are doing that. So the federal government only has to receive tax returns from 50 states and the District of Columbia. 51 tax returns coming in. Their responsibility, according to the legislation, is that they coordinate the state's tax activities, and that once a year they hold a meeting with the state and look at how things are running and determine if there might be some changes in the collection process, the payment process that needs to be made. So the number of people there are probably less than 100, but that's just a wild guess on my part. Nothing authoritative in that number. Mark?
Yeah. Thank you, Larry. Larry, I'm going to give this one to you as well. I've talked about it inside the presentation, but Ralph asks the question again, excluding prebate and FICA taxes, how are low-income taxpayers better off under the fair tax compared to our current system?
I don't have an answer to exactly how they are better off. The research that was done by the economics professors and the report that they gave showed that every financial group, low income, medium income, and wealthy, is better off under the fair tax than they are under the current income tax system. The lower income is better off by the largest percentage, and I don't recall what those exact numbers are, Ralph, but the lowest income group are better off by the largest percentage. The moderate income group is better off but less than the low income group, and the high income group is better off but less than the moderate income group. So everybody in our society is going to be better off financially, and that's a result of the research. Exactly how that came together is over my head. It's out of my pay grade. Maybe
and when you say better off, are we suggesting a lower effective tax rate?
Not just a lower effective tax rate, but more spendable income, more purchasing power.
Yeah, perfect. Larry, would a family have to apply each year for the prebate, asks Kenneth.
Yes. And they would also have to submit an application if there were any changes to their family. For example, a dependent child got married, moved out, or a dependent child moved out to go to college. Under that situation, if the dependent child is still under 18, then the family would still get the prebate for them. If the dependent child was 18 or higher, they could qualify for their own adult prebate, which would be the smart thing to do. And then the family would give up the child dependency prebate that they once received. Mark?
Thank you. Peggy asks, what are President Obama's reasons for not supporting the fair tax, and why isn't my Congressman Sam Johnson supporting it? Well, first of all, Peggy, you've got I don't know why Sam Johnson isn't supporting it, and you should ask him. In fact, sometimes we think we just can't get to somebody. Well, call the office, write the office, but that's a great question. And it just takes one person to be a leader and get the ball moving in your district. So make some noise, find out why, and get something in writing. So you can do that. As far as why won't President Obama support the fair tax, I mean, I think that there's some broad reasons for that. Democratic base, Nancy Pelosi suggests that across the whole Democratic Party, she wouldn't support financially any Democrat who supports the fair tax in their reelection campaign. And so I imagine that that's something that she's probably talked to the president about. It's a convenient way for Democrats to oppose Republicans is probably another reason, and it's really silly, because if we really look at this, if people agree, and it's impossible to really suggest otherwise, but if we agree that the masses of our citizens are better off under the fair tax economically, and what this presentation hopefully showed was that no question is the case, the Democrats are supposed to be the party that represents the the hardworking masses of Americans. This should be their legislation, but it becomes this very convenient way to oppose Republicans because a Republican very initially entered the bill into Congress. So that's my best answer, and Larry, you may have something else, but that's what I think.
Now, the only thing I would like to suggest is a question that you might ask of your congressman, and in fact anyone who is not an advocate for the fair tax. What is it that you like so much about an income tax system that prevents you from supporting the fair tax? Simple question, but very, very narrow in its scope, and you'll watch their jaw drop before they come up with an answer and go off on a tangent somewhere. Mark? Mark, also, I've got an input here from Bill Splain, a wonderful guy from California who's just, you think I'm a wealth of knowledge, you should listen to Bill. And he is offering, when the fair tax is enacted, the annual tax burden of a person at the median income level today, which is $50,000, is 9%, not the 11.5% that I stated. And that is incorporating the sales tax and the prebate. This is even less than just the payroll tax today, let alone the added income tax. Bill, thank you so very much. Glad to have you aboard tonight. Mark?
Yeah, thank you, Bill, and thank you, Larry. Okay, this is another question from Ralph. How can the fair tax be passed and the 16th Amendment repealed without bipartisan support in Congress? We need bipartisan support. The answer is it cannot. So we need bipartisan support, which means we need more people educated on this, that communicate to their elected officials that they're only going to reelect them if they co-sponsor the bill.
Yeah, I'd like to note also, Mark, that when the bill was first submitted to Congress in 1999, there were 3 Democrats and 4 Republicans sponsoring that bill. It was bipartisan, as it is meant to be. We try very hard to keep it in a bipartisan activity here, bipartisan format. But those who are deeply opposed to fair tax will not allow us to do that. And what their reasons are, Mark talked about earlier, their own selfish interests. Mark?
Yeah. This is a good one from Bill, and one that I'll comment on, and Larry, if I leave anything out, please comment. It's important. So Bill says, what about people who get refundable credits when they file their tax returns under the current system, such as the earned income credit, child tax credits, etc.? Will they be against the fair tax if they stand to lose these refundable credits? For example, I recently prepared a tax return where the taxpayer received a refund of over $4,000. She has a small child that qualified her for that. She won't want to lose that. This is crucial. So right now, we ask the question of each other, did you get any back? How'd you do on your taxes? Oh, I got money back. We're so conditioned with the withholdings of our gross income that we forget the fact that all year long we're paying taxes, thousands and thousands of dollars, and we get a couple of $1,000 back and we think we did great. So we've got to change that paradigm. And what the fair tax will do, Bill, is it takes income out of the equation, period. Right? This person will never have an income tax return prepared ever again, period. So we've got to get people to remember that, that when they think they're winning because they get an income tax return back, they're not. They're just losing a little bit less because they've been getting income withheld from their paycheck for the entire year. So there's some more specifics there, but Larry, do you want to make any other comments on that?
Just that, among other things, the lower income people, as the research showed, will be better off by some reasonably large percentage than they are today financially. That means they have more spending power, more purchasing power. That took into account any credits that they might be getting today, child credit, earned income tax credit, etc. Now, I don't know how all of that math works out, not in my ball game, but I have to rely on the independent research that was done by these professors of economics who specialize in tax systems, and feel comfortable that they're going to be better off. Mark?
Yeah. You know, we've been conditioned, again, that we get this sort of windfall of cash through a refund. Well, one of the most important parts, and it's the reason why this webinar is so important and education is so important, is that we can show that people are going to be much better off keeping 100% of their income, getting the prebate, than they are getting a little bit of money back from their taxes bill. So I hope that addresses your question, and if you want to discuss it further, then by all means just keep writing in. We'll do our best. All right, you guys are asking beautiful questions. We'll answer a few more, do the special topic briefly, and then we'll come back here. So Roger asks, who are the Florida reps and senators who currently support the fair tax? I know Congressman Micah in Central Florida here does. I know there's others. Larry, you probably know the names. I don't know them off the top of my head. You can also go to fairtax.org and go to the congressional scorecard and find out exactly who is supporting it. But Larry, do you know of any others in Florida?
Yeah, Dennis Ross over in the Lakeland area is a co-sponsor. Bill Posey is a co-sponsor. Nugent is a co-sponsor. That's just, I think, 3 or 4 of them. But we have 9 in total in the state. I cannot rattle off the names for you, but as Mark suggested, go to fairtax.org and you can get that list. Mark?
Ronald asks, what happens the first payday without payroll taxes on each employee? And the answer to that is, Ron, some really, really happy employees. People who are used to getting a lot less are getting a lot more now. So literally, withholdings that were happening are no longer withheld, and there's no longer a difference between gross pay and net pay. It's just what you get. So if your gross pay is $3,000 or $5,000 a month, you get $5,000. That's your paycheck. Done. All right. Chairman Camp, in his proposal printed in the Wall Street Journal forecasting 2 million new jobs, how many jobs would potentially be created with the passage of the fair tax? Boy, that's a great question, and I have no idea how we might calculate that. Larry, do you?
No, I do not. But I would say that considering Camp is just reducing the corporate tax rate from 35 to 25%, if that's going to create 2 million new jobs, how many new jobs might be created when the corporate tax rate is 0 and the business income tax rate is 0? I think it's substantially more. I don't know where Camp gets his numbers from. Camp, in my opinion, is an idiot, and he needs to be replaced in the next election this coming November. Mark?
Thanks, Larry. Kenneth Smith wrote in that he read that 16 million jobs would be added. I don't know where that number comes from, but that's an interesting figure if there's some, if it can be tracked. Thank you, Ken. All right. A number of people have asked, why is 23% the right number, and how is it being calculated? What's the formula? Well, we're talking about a very intricate formula. I mean, there's so much that goes into it, but at the end of the day, it's generally based around our GDP, and if we take 23% of the GDP, then we roughly come up with the amount of federal taxes that would be collected under the fair tax, which would be equivalent to what the federal government collects today, making it revenue neutral. Are there a lot of factors that go into that? Absolutely. Much more than I, quite frankly, have ever studied and that we probably have time for on this webinar. But certainly, as I mentioned earlier, in terms of the credibility of it, you've got $22 million of independent research by over 80 PhD economists that collaborated to come up with that. The most amount of individuals, the most amount of money, and the largest study on tax reform that has ever been funded and created. So it lends itself to the fact that these guys didn't pull that number out of a hat. But it is largely, or loosely if you will, largely and loosely based around 23% of the GDP. Larry, anything else you would add to that?
No, go ahead, Mark.
Okay. Darren wants to know if that number is capped to protect the taxpayers. It's not capped inside the legislation, but the same power that will get it turned into a law and get it passed, meaning enough citizens contact elected officials and force the co-sponsorship of it, is the same power by which we'll keep it at 23%. Florida has 11 co-sponsors. Thank you, Ron. Let's do the special topic. We've got a lot more questions. Real quick. So the special topic is the impact of the fair tax on small businesses. So let's talk about this for a second. So right now, the small business is burdened by compliance costs under our current our current income tax system. So the compliance costs right now are averaging small businesses, and by the way, a small business is considered any business with less than 20 employees. It's costing small businesses $74 an hour, compliance costs. 91% surveyed report taxes as the #1 burden. And the cool thing is the fair tax asks only one question: how much did you sell to consumers? So what we're saying here is that compliance costs largely get removed, and the amount of time spent to calculate your taxes largely goes away, which I mentioned earlier, in that we can reinvest all that time in making products better and more competitive. So the next points are corporate income taxes go away, payroll, gift, and estate taxes go away. So right now, when a business or a farm needs to get sold and passed on outside the family, there's a lot of tax levied there, and that all of that goes away, and so that burden gets removed. And then if we think about it, consumer disposable income dramatically increases. We've talked about that a lot, and as we answered your questions, there's going to be a lot more disposable income. People are going to keep 100% of their gross pay, and they're going to be able to spend a lot more money. And so here it is, like accumulated or aggregated. We've got 0 corporate taxes to pay for a small business, 0 payroll taxes, 0 estate and gift taxes, dramatically reduced compliance costs, increased efficiency, increased time and money instead of on tax implications can go into research and development of products, increased cash as a result for new staff hires, and increased consumer income, which means dramatically bigger profit margins for small businesses. We're going to thrive, people. It's going to be the biggest economic boom we've ever seen in our history. So that is it in a nutshell. The impact on small business is going to be tremendous. It's going to remove real economic burden, and it's going to remove time and labor burden around tax implications, and all of that can be reinvested into making products bigger, better, faster, and with people with better products that are more competitive and people having more money to spend on them, the only thing that can happen is that sales increase. So it's a pretty exciting time for small business owners if the fair tax gets passed. All right, so there you go. By the way, I'm going to leave this slide up here with all the different ways you can learn more about the fair tax, and I'm going to go back to our questions now. All right. Is there any country that has a consumption tax? I don't think so. I don't know. Do you know, Larry? Larry, you muted yourself.
Thanks, Mark.
Unmute yourself.
I did. Okay, thank you.
What we do know
I'm sorry, go ahead.
Go ahead. Take the floor.
There are countries that have consumption taxes, but they are not exclusively used for, or they're not exclusive to revenue for the country. They have them in addition to an income tax or a VAT, which is also considered a consumption tax in some realms. But to answer your question in the way I think it is asked, they do not have a consumption tax as the fair tax would provide. And we do not want some other country to establish a fair tax type system ahead of the United States, because that would give them the big advantage of drawing income and businesses to them. We would like to have that advantage. Mark?
Yeah, thank you. Yeah, by the way, there were a lot of questions about the prebate and applying each year. I just wanted to mention just a good comment by John. You don't have to get the prebate. You apply for it and you get it. But the wealthy may not do that, and John made that point. So thank you, John. Because if you're making tens of millions of dollars a year, an extra $595 in your household probably won't matter to you. So they won't bother. All right. Bill wrote in a good comment, and the comment was, the missing element in job creation today is the paucity of investment. The fair tax will create the right incentives to invest and grow the economy and increase job creation. That's that's poignant, because remember, one of the things I shared earlier in the presentation is that our current tax structure incentivizes the wrong behavior. The more money we make personally or as a business, the more the federal government takes away. Under the fair tax, the more money we make, the federal government doesn't even know. We will pay more taxes if we spend more, which will happen, of course, but that becomes our choice. And so what happens is, since we're not penalized by earning more and growing more, the lid comes off and we're incentivized to do that. Thank you, Bill. Let's see. David says, can someone do a dry run pretending that we had the fair tax to confirm the total expected revenue to the federal government is really going to be enough? So I think the question is it really revenue neutral? I'm not really sure how to do a dry run, David.
That's what the professors did, David. And what it came down to is simply taking the amount of dollars, and Mark has gone over this before, the amount of dollars that was being received by the income tax system, and then multiplying our gross domestic product by the appropriate percentage to equal that number of dollars. It actually came out to 22 point something percent, 6.8 or something of that nature, which is going to provide about $300 million more than what they were getting now. However, the fair tax, as well as none of the other tax proposals to date, took into account the expanding entitlements as a result of the baby boomers coming into the system in droves. And the tax reforms that are being proposed now are going to be taking that into effect. And we're going to see some elevation in our tax rates under any tax system, because the money just has to be provided to supply the Social Security and Medicare benefits that have been earned by people over the years coming into the system today. Mark?
Yeah. Thank you, Larry. David wants to know, will IRA distributions be taxed? No.
Is it income? That's the question. Ask yourself, is it income? And if you say yes, then the answer is no. It will not be taxed.
Peggy, we only have 7 years to repeal the 16th Amendment. Or is it my understanding that the income tax system will come back? No. So inside the legislation, there's 7 years to repeal the 16th Amendment. And if that doesn't happen, Larry, correct my language if I'm wrong, the bill would need to be reintroduced. Is that correct?
No, the legislation actually says that the fair tax will be repealed, and then it's up to Congress to find another form of income.
Got it. Okay.
The legislation doesn't say it's up to Congress, by the way, but that's the end result.
Yeah, so Peggy wants to know, does that mean that we'll be stuck with both an income and a fair tax?
No, because the fair tax is repealed according to the legislation if the 16th Amendment is not repealed within 7 years after implementation of the fair tax.
Yeah, gotcha. Mike writes in a very interesting point. He says 12 prebates is better than one tax refund. That's brilliant. So if you've got, let's say under the example that I shared earlier in the presentation, 2-adult household, 4 people in the household, and you're getting $595 a month back, 595 times 12, I'm roughly doing the math in my head, but it's somewhere around $7,000. Is that right? Yeah, somewhere around $7,000. That's going to be better than one tax refund that you get in April of maybe a few grand or less. Thank you, Mike. Appreciate that. Never thought of it that way. John wants to know, has anyone written an extended report against the fair tax? Larry, do you want to handle that?
Sure. Not that we are aware of, and if one had been written, we certainly would be. Well, I have to take that back. Back in, I think it was 2007, there is a guy who did, I believe it was a talk or it was an article that opposed the fair tax pretty heavily, and there was a counter report to that written by Americans for Fair Taxation, which pointed out all of the errors in this guy's report, both mathematically and in assumptions that he made. Beyond that, I've not heard of anything, John, so I guess I have to say no. Mark?
Thank you, Larry. Wayne asked the question about an earlier question. He says the earlier question was about the earned income tax refund, not just an income tax refund. Some people receive the earned income tax refund without ever paying any withholding taxes during the year. So if I'm understanding, you're saying people don't pay any taxes and they actually get the earned income tax credit and they make money. Is that how, are you understanding it that way as well, Larry?
Yes, that's how it works under the income tax system. Once again, the research that was provided by the professors implied or indicated very, very assuredly that even including the earned income tax credits or any tax credits that were being paid today to people who had no income tax liability, they will still be better off under the fair tax with as far as their purchasing power goes. I can't say anything more than that about it, guys. We're relying on the research and the efficiency, the effectiveness of these professors. Mark?
Yeah. Let's see.
So one thing to keep into consideration while Mark is looking for another question. Remember that every individual who is working has withheld from their paycheck 7.65% for their Social Security and Medicare contributions. Under the fair tax, even that withholding goes away, and Social Security and Medicare is funded within the 23% that's being collected by people who don't even live in this country. It's the 60-some-odd million visitors that come to this country who will be contributing to our Social Security, Medicare, and federal government revenue. And it is those people who have to date under the income tax system avoiding the income tax. the underground economy it's referred to, they will now be contributing to the system when they buy stuff. Rolex watches, Rolls Royces, whatever the case might be. Okay, Mark?
Yeah. Chris asked, do you know if the fair tax has made its rounds to all the politicians in D.C. so that they are knowledgeable of it? Probably not. It's something that we as citizens need to do to our elected officials, Chris. So, you know, every 2 to 4 to 6 years, new people come into Congress that may not be familiar with it. So the pressure has to be kept on an ongoing, regular basis.
Yeah, I think it's amazing, Mark, that at this point, with all of the turnover we have had in Congress over the years, this congressional session, we now have 74 co-sponsors for the fair tax, more than we have ever had. And a lot of those new co-sponsors are new representatives that have been elected or older representatives who finally got the message. Mark?
Yeah, thank you. What is the primary opportunity for fraud within the fair tax system? Rachel wants to know.
Well, under the fair tax, unlike the income tax, it takes two people to cheat, the one who is selling and the one who is buying. Whereas under the income tax system, an individual can cheat just by putting in incorrect information on their tax return or fraudulent information under the tax return. So that's one thing. Another thing is that since it is being administered by the states being much closer to the people of the state, enforcement will be much stronger than it is under the federal government's regime with the income tax. So fraud is a little less, maybe a lot less prevalent there. As far as the possibility of a barter economy, there's a barter economy under the income tax. There probably will be something under the fair tax, but it will be an insignificant amount of dollars when you look at the big picture. Mark?
All right. Let's see. Ron makes a good point. He says, also, the Joint Committee on Taxation will determine how much fair tax will generate for the federal government. So that committee will also figure out the right percentage number. Wayne says, 2 states, Kansas and South Carolina, are currently considering changing from a state income tax to a state fair tax or sales tax. If either of these states are able to make the change, it will give us a dry run to see how the fair tax affects the economies. Thank you, Wayne. Fair Tax the Truth, Answering the Critics, is a good read for the question of regarding any criticisms to the fair tax. I've read that book. I agree, David, so thank you. Question. John asked the question, is the research provided by the professors, the $22 million of research, available in report form? I don't know. You know, Larry?
I don't know if every bit of it is available, but a ton of it is available on afft.org or fairtax.org. And you just have to pour through those various reports and see which one is appropriate. I know there's one document there that's, I think, 47 pages, and I started flipping through it and saw all kinds of economics formulas that said I'm in the wrong ballpark, so I put it aside. Maybe the answer is there. I don't know. If you can understand that, John, go for it. And if you come up with an answer, please, I know you'll share it with us because you've been a good, strong supporter here. Thank you.
Yeah, David says, my representative replied to me his concerns that any national sales tax was progressive, and that seems to be the main objection to the fair tax. I'm not sure that's the case, but I mean, progressive, we want progressivity inside of our tax from the standpoint of those who are spending more will pay more in taxes. And that's a good thing. That's just. That's fair. And so it's no more progressive than the income tax in that sense. Any other comment on that, Larry?
Yeah, actually, according to what the leaders at Fair Tax have reported from the research, the fair tax literally is a more progressive tax than the income tax is today. And that's because of all of the loopholes and tax deductions that are available that only the wealthier people can take advantage of, I think. Mark?
Yeah. Peggy asks, why did the Bush administration special committee studying the economics of the fair tax not support it? I'm not aware.
Well, what happened there, and I don't remember all of the details, but what happened there was the committee that studied the fair tax changed what they were studying to a national sales tax, changed some assumptions, and came up with the conclusion that it was not a pliable option. So that particular report would not be made available to us for review, so we do not know how they actually calculated what they did. They kept it a secret, and that's because it was corrupt, in my opinion. Mark?
Yeah, and John writes in that the commission didn't support the national sales tax but they didn't consider the fair tax. So there was a difference there. And Bill wrote in with respect to progressive, the fair tax, because of the prebate, is even a little more progressive than today's income tax is. Thank you, Bill. Let's see. Down to our last couple comments here. I think we did it, Larry.
Okay.
I want to thank everybody for writing in. We've exhausted you. We've exhausted the questions out there. It's been a brilliant audience. We thank you so much for spending time with us, for taking time out of your night, and we really hope that you come back and join us. It's just been, we love this forum. So bring somebody next time. Let's keep the conversation rolling. And if we look on the current slide here, that's been up. I'm going to go back to it. Go to fairtax.org, click on grassroots, and get involved if you're not involved. Start an organization, contact leadership, and get involved. Invest your time, invest your dollars, and contact your elected officials. That's what this is all about. Be consistent. So I want to thank my colleague Larry. As always, you're so helpful. I appreciate you being here. I couldn't do it without you. I thank you to John and Bill and all the people that come back and support us. Ron, thank you so much for being here and your support. And we'll keep carrying the torch, guys. So we'll see you next month. Bring a friend. Hope everybody has a great evening. And we'll see you at the end of March. Good night, everybody.